So you've got bars, you've got candles, hollow candles, line. Those are the three main, or the two main sources of actually watching candlestick charts and really using time-based graphs to your advantage and to create profit for yourself from the markets. So a candle, this will be a bearish candle. Open, high, low, close. If it's a bullish candle, it will be an open, low, high, close. Obviously, if it's closing bearish, that means any moves in the time period of this candle's creation above the opening price is a manipulation. Because if it ends up going further down, then what was the point of price going up here? Except, if not, to manipulate traders. Because I'm sure that's what happened. If people see price going up, they usually buy. If price goes above an old high, what do you think people are doing? So the open is here, price goes above an old high. Just for example, in this section of a daily candle or an hourly candle, or even a 15-minute, 4-hour candle, anything that is quite substantial in size. I'm not really talking about the 1-minute candles because it takes a couple of them to make up anything you can really count for profitability. But at the higher time frame, 15-minute plus, this wick could literally cause could trigger a lot of buyers into the market and end up going opposite the direction they intended. How do you find that out? Well, using these type of candlesticks or bars, they're not really candlesticks, these bars, it's can make it easier to understand the concept of the power of three: accumulation, manipulation, distribution. This is from ICT himself. The power of three. They call it manipulation because if you think about it, what other reason does price have to go above the opening price if it's going to end up closing lower? Because they know it's going to close lower, because they have targets before the candle even opens. Does that make sense? So in, I don't know, a 4-hour candle, you might see price do this. My bad. You might see price do this, something like that, and then close. And then here, it would come off an order block, a fair value gap. It could even be a sweep of an old high or old liquidity pool, like how I explained here. And that could cause the reversal. So this is probably the most consistent way, and it's probably the most important thing you can learn in your trading. Because once you learn how to do this and predict where the hourly candle is going to go, you are laughing. I'll give you an example today. I used the 9:30 open almost every day with some success, because you can really see that they drag price around liquidity pools in order to trigger unwilling and willing participants into the market. So just remember this concept: open, it goes above here to manipulate people, and it drops lower because every order needs a counterparty. So the manipulation would cost them a position. And because they are in control, they can always push it lower by selling more and creating more pairing of orders below lows here or in fair value gaps here in the distribution section. The distribution always needs to take place after the manipulation. Otherwise, it's not a manipulation. So, as you can see here, we've got an order block. got this big section of accumulation. This here would be anything above here would be these highs, would be distribution, would be a manipulation, sorry. And you'll be looking for price to distribute down. Yeah, firstly below these lows. And ultimately below these even lows. I'm sure if you go on the higher time frame chart, you'll see a lot of gaps, but we're just going to keep it short and simple here. Got this good sign that price is going lower since price came out of this section, this block. It has created even lows, so we know there is liquidity below here, but if you look at actually what's happened, price has come out of here and it wants to come back to the initial level that caused this rapid movement to the downside. You see price coming down rapid, and you get a slower return. Slower return up to origin. Point of origin to I don't know, launch. It's so easy to measure. You can see the time it took for price to go down here and the time it took for price to get back here. There's no competition. This is much slower for price to cover this ground. Does that make sense? Message me if you still need help with that. But price literally took less than an hour to get down here, but it took more than an hour, more than 6 hours to get all the way back up here. So you can see price is very bearish because the bulls have no power whatsoever. So 9:30 comes. This is when the stock market happens. The stock market opens and it triggers in a lot of traders. So let's see how you can profit off it. We have this level of liquidity here. I want to make it turquoise. Give me 1 second. We have these highs prior to 9:30. This is all pre-9:30 liquidity. Got this. Got these lows. And ultimately, you've got these big fat even lows and the continuation to the downside. That was teased over here. So think about it. After we've got that break of the downside, we're still looking for bearishness. So what do? You think, okay, what do you think is going to happen? You're going to get good at this. If you keep watching the videos and you fully understand this, you're going to be able to see this is going to happen. And you're going to be like a monk. You're literally not going to enter any trades until you see what you like. You're going to be part of the algorithm if you continue watching this. Continue watching my videos. And this is where I actually did it. Right, this is on 15-minute chart. There, so right there, sell stops have been triggered, take profits or stop losses have been hit. So a lot of sell orders flood into the market right here. Just go sell orders inside the market. They're active now after this low is being purchased. What happens now? Price drags these sell orders where? Above the high. into the POI, into the order block, the bullish candle. Finally, sweeping these guys out, creating a third push into it. 2, 3, the third push into the order block. And now you can literally sell there, or you can wait for the reversal pattern. And that would be it. You've got a lower, you've got a higher low candle here on the candle, lower low, and a higher low. So these 3 candles, this formation here is a low, and it's the last low before the third push up occurred into the reversal point. So once that is broken with some strength, as you can see, the energy that was used in breaking this, you can look for sells in this leg. There you go. Picture perfect sell right there. And aim for that with confidence. Take this off. That's 50%. Once they go up higher than that, it's not really necessary. So these guys, these buy orders are active above here. Let's make it blue for buy orders. These sell orders got stopped out. So now the smart money is not worried about going below here, because everyone that needed to be taken out of the trade is out once price gone over here. But now the people that are active are the buyers from up here. And now they're going into negative. And they're going into negative fast. Okay. So now price needs to go below here, because smart money wants to dump the sells that they took in this leg off, and they need to do it in profit. Okay, you follow me so far? They need to dump their orders that they took up in here and above here, because they sold to the people that were buying here. Buyers here, smart money selling, they need to close these orders in this leg in profit. Okay. And how do they do that? By taking it below here. So let's see what happens. Lovely. This happened on a bank holiday, by the way. Midnight open is a good take profit level, always. And there's your take profit. This could just be running in the background. I send you the signal out on my chat. You know, you guys are welcome to join. There's a way you can join for free. Just message me on Telegram and I'll get you in, because these are the type of trades we're catching.